Hey, it's January 22nd and 2026. Let's talk a little bit about our portfolio. But first, before that, let's talk about Intel. Intel is the stock that I think out of all the hardware AI stocks, it's one of the hottest stocks other than Micron. And you can see here's the 6 month graph. It's gone all the way from the 20s, and a lot of things has happened. Support from government, investment from like NVIDIA, and also getting their 18A process out there working there for fabrication of chips on that processes, which is important because you can squeeze more transistors into a denser area, reduce power consumption, improve performance. So it's a big leap for them. I applaud them, but they had a heck of a run, and in the past few days they've also shot up. You can see it popped all the way up to 55 points, and that's kind of like where we wound up heading into earnings. And so they're just down 7 points, which, okay, you might think that that's a big percentage. True, it is, but from what they've where they came from in the recent times, they're still up quite a bit. And I think the reason is because their forecast for the next quarter is not as hot as what Wall Street would like to see if they were to sustain that stock price. Well, let's move on. In the last episode of this video series, for this buying selling series, I talked about selling Carvana if it should hit 480, selling some of it on our portfolio, and it's close there. So tomorrow I'll see where it is and maybe put it in order to unload some Carvana, and we can look at our portfolio in a short bit. The other one was CoreWeave. We don't have it in our portfolio, and after I mentioned it last time, I wanted to acquire some for our portfolio, but right after that, it just started going up, and I was hoping to land it for around $70, and I think it was around 75 or high 70s, close to 80, and just went up all the way past 100, and it's a little bit back down. So that's where CoreWeave is, and I don't really want to pull the trigger unless I got it around 70. So I don't know if the ship has sailed on this one. Another interesting stock is Tesla. Tesla did pop today. It's at 450, and I thought a little bit about it. Now I might want to sell some Tesla from our portfolio too, and just wait for other opportunities. And the reason they popped today is because, and just to be clear, it hasn't like popped to new records. I mean, it's kind of like up and down stocks these days, so it's kind of recovered from where it was like several days ago or like weeks ago. Here's like the 1 month graph. Yeah, 1 month it's reached a high of 480. So I don't, maybe won't sell it tomorrow, but if it goes to, let's say, I don't know yet, not a definitive figure, but I'm just throwing a number out there around 470. I would like to unload some Tesla too from our portfolio, and just wait for some other opportunity if I can't find anything immediately to jump into. Yeah, here's an article about how Tesla removes safety monitors finally from some of their robo-taxis, and that's driving up the stock. All right, so yeah, here's the WeBull view that we used to demonstrate our buying selling series platform. We're down to 5 stocks. We had some other ones, and you can see Carvana. Carvana was one of the stocks that we had at the beginning of our portfolio, and the value right now is about 147K. It's been down in the recent week. It was all the way, I think, 150 something. At its peak last year, it was almost a 200K. Might have hit 200K. And again, this whole thing started, this demo portfolio started in March 12th, 2025, and we didn't use any margin. We just bought and sell tech stocks mostly, or not, well, not just tech stocks, stocks on the NASDAQ, including stocks like Carvana and Robinhood, which is more like high tech. I guess it's not AI related, but it's still kind of a tech financial stock, fintech. All right, so yeah, Carvana is here. We have about 12% of our portfolio. I'm thinking about unloading 40 shares. We just hold a few, just keepsake. The reason why I want to unload Carvana is because it's had a heck of a run, and it's really up there. Their price targets from the analysts saying it can go further up to like 500, over 500, whatever it is. But thinking more about it, I think I would rather not have such an expensive stock. I mean, it could keep going up. It's only, as long as it's and it's doing well in its market segment of used car markets, uh, and doing well as a leader of online sales and being profitable to take a car and recondition it if needed, and then to be able to sell it. That's their something that they do well in, and so that maybe they can price the cars a little bit lower than the competitors like even CarMax, which who are not doing well, and their market cap's like 100 billion. Carvana. Yet you compare that to CarMax, they plummeted in the past few months. Their market cap's like at 7 billion. Like, what a contrast. So anyways, yeah, just selling like maybe 40 shares of Carvana, and yeah, Tesla hits around, I don't know, let's say around 470 or something like that. We don't have a lot, but maybe sell like 20 shares. We just hold like 5 shares just for the sake of like keeping in our portfolio to keep track of things. And I don't know if I want to jump into anything right now. Oracle seems a little relatively cheap, but maybe I want to wait on that. Just sit on the cash and wait for another opportunity. I don't want to jump into something like, what's hot these days is memory, of course, Micron specifically for a U.S. company. The other ones are Samsung and SK Hynix, which are on the other exchanges. The other things is like TSMC, chip fabrication equipment. Also, Applied Materials is another one. Lam Research is a hot one. But yeah, I don't know. I don't think I want to buy high and sell higher in this case. I'd rather just look for something else, given how the market is, where it's one day it can just flip on you, and buying high and higher is it's not like, it's not an easy game, like relatively to the past couple of years, I would say, to ride away by buying something high and selling it higher. So yeah, okay, let me just show you here. Back in 3/12/2025, Carvana was one of our first purchases here. I mean, we've been moving in and out of Carvana. We sold it a little bit later, but we started at 180. I mean, this was like less than a year ago, 180, and now today is at 480. But if you even look back a little bit before that, Carvana went from only a few dollars in its lowest time before the co-founders was able to talk to their creditors and come up with a plan to turn the company around. So yeah, I applaud them. All right, yeah, I just want to give you an update on the portfolio and what I'm going to do and the game plan. It's basically sell some Carvana, and if Tesla goes up further, sell some Tesla 2. CoreWeave comes down to 70, I'm in for that. Otherwise, I just look for something else. Okay, yeah, that's it for this video. Keep you updated with another one next time when it feels right. Okay, so stay tuned, and don't forget to like if you do. I'll catch you next time then. Bye.